Hi there, welcome to this week midweek market analysis. So as usual, we're gonna kickstart today's video over here with the dollar index. Okay, so at this moment, what we're seeing here is the market has pulled back towards that 618. Currently, it seems to be supporting around there. Now, the primary expectation and the primary forecast over here is that as long as the market is able to maintain above 101.90, we do expect a little bit more upside for the dollar and potentially retesting the previous high somewhere around 105.80. Now, alternative expectation or alternative scenario over here is that if the market actually managed to break below 101.90, then we may have potentially see the top over here, and we'll continue to expect a little bit more downside for the dollar. Now, from a higher time frame perspective, things are a little bit clearer in terms of the overall direction. While short term, we may expect this to go up, but overall you can see that the momentum to the downside is the one that's controlling the entire direction. And even if we get a short-term upside push here, overall we're eventually still looking for more downside for the dollar index. Okay, so the question is just a matter of like, is this the end of the retracement, or are we going to get another pushback up to complete the bigger retracement before the move to the downside? Okay, so that's the overarching directional bias for the dollar that we have right now. And of course, going into this week, or I would say going into next week, we may get some clarity in terms of the patterns, the structure that the dollar index may develop into, and then that would also help us position better moving forward. You know, whether we should be looking for a buy back to the upside, or would we be starting to look for the sell. Now on euro dollar, it's kind of inverse relationship with the dollar index, so we kind of get this 618 test as well. So far, we did not see any strong immediate push to the upside, but this little retracement back to 618 seems a little bit impulsive. So just be cautious on any sell while the overall direction remains bearish. Quite similar to the dollar index here. Short term, we're expecting downside and then eventually potential upside for the euro, at least for the bigger time frame perspective, right? So you can see over here, that's what we're looking at. Strong move up, three-wave pushback, and then another move to the upside. Okay, so that's on the euro dollar side of things. Okay, if you can get a decent rejection around here, maybe today or tomorrow, we may expect more downside, and that can be a potential sell trade opportunity. Now for pound dollar, I think this is a very clear structure. The question is a matter of like when. Okay, it's not a matter of like how. I would say, you know, it's not a matter of will it happen, because the probability of this is very, very high. It's just a matter of like, are we going to see a little bit more upside before that retracement, or are we going to see that retracement from here? Okay, so there are two potential trade opportunities over here. One is that if you're more of a short-term counter trend, you can potentially capitalize on this retracement structure, which means you're selling it to the downside. If you're more of a swing or position trader, you'll be a little bit patient and wait for the retracement to complete, and you look for the bigger move back up. Now the structure is very, very clear, because if I zoom out a little bit, okay, maybe on the daily time frame over here, what you can see is that, okay, we have this structure in green. Okay, so in green you can see we have that 1, 2, 3. This may be the fourth wave, and then we're developing the fifth wave up in green at this moment. And in terms of the yellow color ones, you can see this may be a leading diagonal. So if you can get a 3-wave simple corrective pullback to complete wave 2, we can expect 3, 4, 5 to again complete the bigger green wave, fifth wave up. So the upside looks pretty neat, and of course, if you kind of combine a little bit with the fundamentals from the dollar, where we are looking at overall longer term downside on the dollar itself, then pound dollar may give us more upside, right? So this is GBP USD is definitely one of the clearer pair in terms of structure, as well as in terms of like the macro and fundamental point of view, to look for a buy trade. Okay, so this is definitely a high conviction trade. There's definitely a high probability. So the question again is, when are we going to get that pullback? If you get it, okay, you definitely want to focus on potential buy trade moving forward. Now Aussie dollar, we're maintaining a pretty neutral bias over here because this structure, yes, it looks very corrective in nature. We are still expecting one more pushback to the downside, but in terms of context, I wouldn't be selling this. I wouldn't be too eager to sell this, right? The reason is because you can see this push up, this move back has already probably come back and test that 50 and 618 zone. So any sell side is kind of like short term. The downside potential is not that great also, unless we are able to break off this zone and then this comes down, which the overall structure may then need to be updated. Okay, but for now, we'll keep things simple. We are expecting a little bit more downside, but perhaps from there on we may see a stronger rally. Okay, so if you're short-term intraday day trading, definitely look for a sell. But if you're more of a swing in position, just be neutral and be patient on that. Next, we have the dollar Canadian. I think dollar Canadian may be setting up a potential buy within the week, or even going into early next week. So simple structure over here we're seeing is a 1, 2, 3 WXY to complete wave 4. And then we expect one more push to finish off the 5th wave. Okay, so right now, based on Elliott Wave, one of the rule is that wave 4 can never touch wave 1 territory. So we have this invalidation level over here, and that kind of builds up a pretty neat risk to reward ratio as well, because if you're looking to buy around this level or this area, and then our stop is just below it with a target up there, okay, you can see the risk reward is definitely very, very interesting. If you need some kind of confirmation from price action, then ideally you want to give it maybe another day and see if you can get a crawl pattern coming into this area, and then that would be a potential buy trade for you with a target back up at 1.3945, right? You can see over here. Okay, so this one here, very, very clean structure, very clear upside potential as well. So do keep an eye on that. Okay. Dollar yen is also doing a pretty nice opportunity, at least for the short term. Okay, so we are seeing this as a 1, 2, 3, 4, 5, potentially a completion of the wave A. We are now expecting a 3-wave pullback to complete wave B before the next move back down. Okay, so the upside here may be quite interesting if you are more of a shorter term trader. Okay, so you can see a breakout potential, a stop just below that low. Your target here at 50% or 618, that gives you about 1:1.2 or somewhere around 1.7, right? So it's not like a fantastic risk to reward ratio, but it's still worthwhile, right? At least for the short term, if you can get at least 1:1, I think that makes sense. So if you are more of a position and swing trader, then of course you'll be waiting for this area to look for a sell to complete the bigger 1, 2, 3. Okay, so that's on the dollar yen side of things. Now, XAU USD, this is our primary projection and our primary forecast, a triangle structure. And from Elliott Wave, a triangle usually develops with an internal 5-wave, 1, 2, 3, 4, 5. So with that, we are expecting that the remaining part of this week, likely we're going to see more consolidation, we're going to see more range-bound environment. And of course, you know, trying to trade within this kind of environment is just not going to be ideal because the market is constricting, is contracting. There's not much of a movement that you can really capitalize on, and psychologically it's not easy to manage. Okay, so my suggestion for gold here is to just simply remain on the sidelines, be patient, wait for a clear structure to complete before we're going to jump into any conclusion. Okay, now while we are forecasting a triangle right now, there are many possibilities of how this can still play out into. For instance, right, this can actually start to go up a little bit more, and this can still turn into a crawl, okay, and that would still be a 5th-wave structure for downside. What can also happen, of course, is that this can start to come down here, complete this as a 1, 2, 3 simple flag for an upside, right? So there's still many possibilities, and for that reason, again, my suggestion is to just remain patient, wait for the market to develop into something clearer before we commit to any trade. Crude oil, testing the 100% Fibs, so we kind of have this structure here, 3-wave, the market is testing the top of the channel as well. So primarily right now we're expecting a deeper correction, maybe back towards 50 and 618. If we can get a corrective move back down, then we can look for more upside over here on crude oil. Okay, now if this comes down pretty fast, right, then what can happen over here is this may continue to come back down and retest the bottom. Okay. So give it some time. I think by next week we may get a clearer idea, what structure this is developing. Should we look for a buy or should we look for a sell? But for now, this is the primary projection. If you can get corrective structure retracement, we'll be bullish on that. S&P, pretty similar to the dollar dollar yen. We're basically looking for short-term upside. Just that this looks very, very corrective in nature. It's going up, so that's why I'm saying it's a short-term upside potential, because price may still come back down after which. One setup that we can look up for is a breakout. Okay. Alternatively, if we can get a little bit more of a retest of the bottom of this channel, so it's a mini impulse, mini correction, you can look for a pending order here as well for the upside. Okay. So S&P short term, okay, targets over here is around 4145. Pretty decent risk to reward ratio, right? Depending on how you're going to execute that as well. If you break out, you stop just below that. Risk reward is about 2.4, 2.5, pretty neat. If you're more of a pending order, waiting for it to retest the bottom of the trend line, you stop just below that recent low, you target up there. That gives you a risk reward about 3.8 as well, right? So definitely the potential is there. Okay, the idea is just look out for it, follow back to your trade plan, go back to what's the criteria, what's your setup for you to execute that trade. Okay, last one here that we have is Bitcoin. Okay, so Bitcoin, what I'm projecting right now is a simple kind of flat channel correction. This is coming down very, very corrective in nature as of now, so we are expecting this to pull back a little bit and then develop another push down. So 1, 2, 3. If you're looking for a buy, wait for this to develop before you look for it. Okay. For this entire piece to develop, okay, it requires about 2 to 3 weeks time. So you just need to be patient on that. If you're more of a interested in buying the Bitcoin up, right? Just be patient on that. If you're more in terms of like just trading it in the short term, if this develops here, maybe by the end of this week, early next week, you can look for the sell trade itself. But for the next few days, just be patient on that. Right, so that's all from me. All the best to your trading for this week, and I'll see you guys in the next one.